You just swiped your debit card at an ATM you have used 100 times before. The machine spits out your cash, takes almost $5 in fees, and somewhere in a government database, that transaction just got flagged. The rules around your own money have quietly changed in ways most Americans have no idea about. And by the time you finish hearing all 10 of these, you are going to look at that little machine on the corner very differently. Number 1, the $5 ATM tax nobody voted for. Every time you pull cash from an ATM that is not your bank's, you are now paying an average of $4.86. That is a record high. Bankrate's 2025 checking account and ATM fee study confirmed it. That number breaks down into 2 charges. The ATM owner hits you with an average surcharge of $3.22. Then your own bank charges you another $1.64 on top of that for daring to use someone else's machine. And here is what makes this sting. In 1998, when Bankrate first started tracking these fees, the average was $1.97. That means the cost of touching your own money has more than doubled. If you use an out-of-network ATM just once a week, you are burning through $253 a year in fees alone. That is groceries for a family of 4 for almost a month. And there is no federal law capping what banks or ATM operators can charge you. None. They set their own prices. Your move. Check if your bank participates in a surcharge-free ATM network like Allpoint or MoneyPass. Most people have no idea these networks exist, and they give you access to tens of thousands of fee-free ATMs across the country. If your bank does not participate in any of them, it might be time to switch. Number 2, your city decides how much you pay. Not all ATMs are created equal, and where you live determines how badly you get hit. According to Bankrate's data, Atlanta has the highest average total ATM fee in the country at $5.37 per transaction. San Diego and Phoenix are right behind. Boston had the lowest at $4.37. That is still a full dollar more than what the national average was just a few years ago. And if you are traveling, it gets worse. Pull cash from an ATM outside the United States and your bank will charge you a flat fee plus a foreign transaction fee that runs between 1% and 3% of whatever you withdraw. So you take out $200 in London and you could be paying $10 to $15 just in fees. Your move. Before you travel, look into online banks like Schwab or Capital One that reimburse ATM fees worldwide. If you are already home and just getting hammered by local fees, use your bank's ATM Finder app. Almost every bank has one, and most people have never opened it. Number 3, the government's $200 tripwire. This is where things take a sharp turn. In March 2025, the U.S. Treasury's Financial Crimes Enforcement Network, known as FinCEN, issued a geographic targeting order covering 30 zip codes across 7 counties in California and Texas along the southwest border. The original order required every money services business in those zones to file a currency transaction report for any cash transaction over $200. Not $10,000, $200. That means if you walked into a check cashing store or used certain financial services in those zip codes and moved more than $200 in cash, the federal government got a report with your name, your social security number, and the details of that transaction. Now, FinCEN modified this order in September 2025 and raised the threshold from $200 to $1,000. But the reporting requirement is still active through March 2026, and the government has made clear it plans to keep renewing and expanding these geographic targeting orders. The normal reporting threshold everywhere else in America is $10,000. In these border zones, it dropped to a fraction of that. And while ATM transactions themselves are technically subject to these thresholds, most ATMs have withdrawal limits low enough that they rarely trigger the report on their own. But here's the thing. If you are making multiple small withdrawals across different machines or services in those zip codes, those can be aggregated. Your move. If you live or do business anywhere near the California or Texas border, know your zip code. Check whether it falls in one of those 30 targeted zones. And if it does, understand that your routine cash transactions are being reported to federal authorities at a level that did not exist 2 years ago. Now, everything I have told you so far deals with what is happening at the machine and what the government is tracking. But the next few are about what your bank is doing behind your back. Number 4, the overdraft protection that just disappeared. In December 2024, the Consumer Financial Protection Bureau finalized a rule that would have capped overdraft fees at $5 for banks and credit unions with more than $10 billion in assets. The CFPB estimated this single rule would save American consumers nearly $5 billion a year. $5 billion. The rule was scheduled to take effect October 1st, 2025. It never did. Congress used the Congressional Review Act, a fast-track process that lets lawmakers overturn recently finalized federal regulations with a simple majority vote, to kill it. The Senate passed the resolution 52-48. The House passed it 217-211. President Trump signed it into law on May 9, 2025 as Public Law 119-10. And here is the part most people miss. Because this rule was killed through the Congressional Review Act, the CFPB is now legally prohibited from ever issuing a substantially similar rule in the future unless Congress passes a brand new law specifically authorizing it. So that $5 cap is not delayed. It is not paused. It is permanently dead unless a future Congress revives it. Meanwhile, the average overdraft fee in America right now is $26.77, and 94% of all checking accounts surveyed by Bankrate still charge it. Think about what that means at an ATM. You check your balance, you think you have enough, you withdraw $60, and the transaction puts you $2 into the negative. The bank covers it, and then they charge you $27 for the favor. You just paid $27 to borrow $2 for a few hours. Your move. Link a savings account to your checking as overdraft protection. Many banks offer this for free or for a small transfer fee that is a fraction of $27. And if your bank does not offer it at all, move to one that does. Several online banks have eliminated overdraft fees completely. Chime, Ally, Capital One, they all dropped them. Number 5, your daily withdrawal limit just shrank. Banks have been quietly lowering the amount of cash you can pull from an ATM in a single day, and most customers only discover this when their card gets declined at the worst possible moment. Daily ATM withdrawal limits at most major banks range from $300 on the low end to $1,500 on the high end, depending on your account type and relationship with the bank. Some premium accounts allow up to $5,000, but here is what is actually happening. Banks are adjusting these limits downward for certain debit card types without any notification. No letter, no email, no app alert. You just find out when the machine says no. And on top of that, individual ATM operators can set their own per transaction limits that override your bank's daily cap. So your bank might say you can withdraw $1,000 a day, but you walk up to an independently operated ATM and it only lets you take $300 per transaction with a maximum of 2 transactions. If you need cash in a genuine emergency, a car repair, a medical bill, bailing someone out, this can be a devastating problem. You might have $15,000 sitting in your checking account and still not be able to access more than a few $100s of it after business hours. Your move. Open your bank's mobile app right now and look for your daily ATM withdrawal limit. If you cannot find it, call the number on the back of your card. Many banks let you raise the limit temporarily or permanently with a simple request, but do it before you need it. Standing at a machine at 10 o'clock at night getting declined is not the time to start that process. Number 6, the fee for having no money. This one sounds like it should be illegal everywhere, and in one state it finally is. Until January 2025, if you walked up to an ATM in California, inserted your card, tried to withdraw money you did not have, and the transaction was instantly declined, your bank could still charge you a fee for that failed attempt. Not an overdraft fee because no money was actually lent to you, a non-sufficient funds fee for a transaction that never happened. California Assembly Bill 2017, signed by Governor Newsom, put a stop to this for state-chartered banks and credit unions effective January 1, 2025. But here is the reality. In the remaining 49 states, banks can still charge you for a declined transaction, and many of them do. Bankrate's data shows that 61% of checking accounts nationwide still assess NSF fees, with an average charge of $16.82. So picture this. You are at the ATM. You try to pull out $100. The screen says insufficient funds. No money leaves your account. Nothing happens. And 3 days later, a $17 fee shows up on your statement for the privilege of being told you are broke. Your move. Read your account fee schedule. Specifically, look for the NSF or non-sufficient funds section. If your bank charges for declined transactions, you have every right to be upset, and you have every right to leave. Credit unions and online banks are far less likely to charge this fee, and several have dropped it entirely. Here's the ticking clock you need to be aware of. Many of these fee structures reset at the start of each calendar year or each quarter. If your bank just adjusted its fee schedule for 2026, you might be paying charges right now that were not there 6 months ago, and you would never know unless you specifically checked. Number 7, the savings account withdrawal trap. Most people believe the old 6 withdrawal per month limit on savings accounts was eliminated, and technically that is correct. In April 2020, the Federal Reserve suspended Regulation D's 6 transaction cap on savings accounts as part of its pandemic response. Reserve requirements were dropped to 0, and the Fed has publicly confirmed this change is not temporary. As of 2026, there are no plans to reimpose the limit. But here is where it gets infuriating. A large number of banks never updated their internal policies. They kept the 6 withdrawal cap on the books. They still enforce it, and they still charge you $3 to $5 every time you exceed it. They are not legally required to keep this limit. There is no federal regulation telling them to. They just choose to because it generates revenue, and this directly impacts your ATM access. If your debit card is linked to your savings account and you make ATM withdrawals from savings, each one counts toward that phantom limit your bank is still enforcing. You might hit it by the second week of the month and start racking up fees on every withdrawal after that without understanding why. Your move: call your bank and ask a direct question. Do you still enforce a monthly withdrawal limit on my savings account? If they say yes, ask them to cite the federal regulation requiring it. They cannot because it does not exist anymore. If they will not budge, move your savings to a bank that is actually caught up with the law. Ally Bank, Capital One, Marcus by Goldman Sachs, American Express National Bank, they all dropped the restriction years ago, and they are paying higher interest rates too. Now, I want you to understand something important. Everything I have covered up to this point is inconvenient and expensive. It costs you money. It limits your access. It charges you for things that should not cost anything. But these last 3 points are the ones that tell you where all of this is actually headed, and the direction it is moving is not in your favor. Number 8, ATMs are vanishing from your neighborhood. The number of ATMs in the United States has dropped significantly over the past several years. According to Euromonitor International, the total count fell 4% from 2019 levels, down to roughly 451,500 machines. That might still sound like a large number, but when you combine it with the fact that bank branches have been closing at a record pace, those ATMs were often the very last physical connection people had to their own money. And the economics of maintaining ATMs are getting worse every year. Banks pay to install them, stock them with cash, service them, upgrade their software, and comply with security regulations. As fewer people use cash, those fixed costs get spread across fewer transactions, which means each machine becomes less profitable. So banks pull them out. And where do they disappear from first? Not Manhattan, not Beverly Hills. They disappear from rural communities, from low-income neighborhoods, from the exact places where people depend on cash the most and have the fewest alternatives. Over in the United Kingdom, they have already lost 40% of their ATMs since 2015. It got so bad that the UK government stepped in and gave the Financial Conduct Authority power to require banks to assess whether closing an ATM or branch would cut off cash access for the surrounding community. As of March 2026, the UK has 225 shared banking hubs operating as replacements. The United States has no equivalent law, no equivalent assessment requirement, and no equivalent backup plan. If your ATM disappears tomorrow, that is your problem. Your move: know where your nearest and network ATMs are, not just one, but your top 3. Download your bank's locator app and start building a habit of getting cash back at grocery stores and pharmacies, because that may quietly become your most reliable way of getting physical cash in the years ahead. Number 9, your cash is being tracked like never before. The FinCEN geographic targeting orders I described earlier are just the visible part of a much larger shift. In December 2025, Treasury Secretary Scott Bessent announced that FinCEN will continue and expand its surveillance of cash transactions along the southwest border and critically beyond it. The agency is deploying what it described as high-performance data processing systems to analyze transaction patterns across multiple money services businesses and financial institutions simultaneously. They are not just collecting individual reports anymore. They are running pattern recognition across thousands of businesses, looking for anything that looks unusual. And here is what should concern every American, not just people near the border. FinCEN has publicly stated that it intends to use data collected from the geographic targeting orders to support investigations outside the original target zones. In plain English, that means if an algorithm spots a pattern in one of those 30 border zip codes, it can follow the thread to a business or individual in Ohio or Georgia or anywhere else in the country. The standard currency transaction report threshold of $10,000 still applies nationally. But cash movements between $1,000 and $10,000 are now being scrutinized with tools and at a scale that simply did not exist before 2025. And the entire infrastructure being built around these targeting orders is designed to grow, not shrink. Your move: if you regularly deal in cash for your business or personally, keep meticulous records. Save every receipt, document every deposit and withdrawal. Make sure your cash activity lines up cleanly with your reported income. And understand this clearly: Structuring, which means deliberately breaking a large cash transaction into multiple smaller ones to stay below a reporting threshold, is a federal crime under 31 U.S. Code Section 5324, even if the money is 100% legal, even if you earned every dollar honestly. The act of splitting the transaction itself is the crime. People go to prison for this. Do not do it. Number 10, the silent push to make cash obsolete. Take a step back and look at the full picture. ATM fees hit all-time highs 3 years running. Banks quietly lower daily withdrawal limits. The one rule that would have capped overdraft fees at $5 gets killed by Congress and permanently banned from being reintroduced. ATMs are disappearing from communities across the country. Cash transaction reporting thresholds get dropped from $10,000 to $1,000 to $200 in some areas. And meanwhile, every bank, every fintech company, every payment platform, and every government agency is aggressively steering you toward digital payments, toward Zelle, Venmo, Apple Pay, Tap to Pay, Auto Pay, toward transactions that can be tracked in real time, charged fees, taxed automatically, frozen remotely, and reversed without your consent. Cash is the only form of payment that gives you genuine privacy. It does not require a phone, an app, an internet connection, or a functioning power grid. It does not charge you a processing fee. It does not get declined because a server crashed. It is not subject to a system outage that locks you out of your own money for 72 hours. And yet every single policy shift happening right now is designed to make cash harder to get, more expensive to use, and more suspicious to carry. According to Federal Reserve data, roughly 15% of Americans still rely on cash as their primary method of payment for everyday purchases. Over 80% use cash for at least one purchase a month. For many of them, especially the elderly, the unbanked, the underbanked, people in rural areas, people in cash-intensive industries, this is not a preference. It is a necessity. And every rule change I have walked you through tonight makes their daily lives measurably harder. Your move. Use cash on purpose. Not because you have something to hide, but because the right to access your own money in physical form without being tracked, taxed, or penalized is a right worth actively defending. Pay attention to every new rule, every new fee schedule, every new reporting threshold, because these changes do not arrive with announcements. They arrive quietly. And once enough of them stack up, the freedom to simply walk up to a machine, pull out your own money, and walk away without anyone watching or charging you for it, that freedom becomes something you used to have. Here is what all of this adds up to. You walked into this thinking ATMs were simple. Put your card in, take your cash out, go about your day. But behind that screen is a system that is charging you record-breaking fees, shrinking your access to your own accounts, reporting your transactions to federal law enforcement agencies, eliminating the consumer protections that were supposed to keep fees in check, and slowly but deliberately nudging you away from cash and into a fully digital financial system where every dollar you spend leaves a trail. And the people most affected by all of this are not criminals. They are not cartel operatives. They are the 67-year-old woman in rural Texas who pays her landlord in cash because he does not accept Venmo. The small business owner in San Diego who just discovered his routine bank deposits are being reported to FinCEN. The single mother in Atlanta who loses $253 a year to out-of-network ATM fees she did not even know she was paying because nobody told her about Allpoint. Here's what you need to do this week. First, log into your bank app and find your daily ATM withdrawal limit. If it is lower than you thought, request an increase immediately. Second, check whether your bank participates in a surcharge-free network like Allpoint or MoneyPass and start using only those machines. Third, call your bank and ask if they still enforce the old Regulation D6 withdrawal limit on your savings account and whether they charge you for going over it. Fourth, set up a linked savings account as overdraft protection on your checking so you never pay a $27 fee for a $2 shortfall again. Fifth, if you live in one of those 30 targeted border zip codes in California or Texas, know that your cash transactions above $1,000 are being reported to the federal government right now. Sixth, open a free checking account at an online bank that reimburses ATM fees and charges zero overdraft fees. Use it as your backup. Seventh, start getting cash back at grocery stores, pharmacies, and gas stations instead of making separate ATM trips. It costs nothing, it is instant, and it does not count against your daily withdrawal limit. If you made it this far, you now know more about how ATMs, banking fees, and cash access actually work in this country than 99% of the people around you. Hit that like button if this opened your eyes to even one thing you did not know before. Subscribe because I break down the financial rules and legal changes that directly affect your money and your rights, and most channels either skip this or get it wrong. Now I want to hear from you. Drop a comment and tell me, do you think the push away from cash is really about convenience and modernization, or is it about surveillance and control? Share this with anyone you know who uses an ATM, and that is basically every adult in America. Knowledge is power. And right now, it might be the only thing standing between you and a very expensive mistake. Stay sharp, stay informed. I will see you in the next one.